Hey guys, my name is John Swain, president of Swain CPA, and this series is called We Love Small Business. So we're just about through with the first year of the month, and we're staring down the barrel of tax season. Okay, so here's a few practical tips for small business owners, for both incorporated and unincorporated businesses, that you can use to help reduce the stress of tax season and maybe even have a little fun. Tip number one, eat that frog, as penned by Brian Tracy's best-selling book by the same name. Mainly, don't procrastinate. Get this nasty business behind you so you can get on with better stuff, more productive stuff. There's nothing productive about the process of getting taxes done. It's what we call an enabler. We have to do it to stay in business and stay out of jail, but it doesn't do anything whatsoever to improve the bottom line. And remember, most folks want to put it off until the last minute, and that also turns up the stress. So eat that frog. Tip number two, make sure your books are up to date, and that's actually good rule of thumb anyway, and infinitely more important from a management perspective, for ensuring your information is relevant and timely when you can actually do something about it, like now. Having the books up to date means the bank is balanced. All the invoices for monies owed to you and monies you owe are posted. There aren't any suspense or clearing accounts that I do see from time to time. So do you need any help with that? Talk to your accountant. They will get you the help you need. And a little plug for my firm, we actually have a bookkeeping training course available called the Inspired Bookkeeper, for which you may qualify for some government funding as well. So direct message me later if you'd like some additional info. If your business is incorporated, you will most likely be getting a call from your accountant sometime between now and the end of February asking questions about your shareholder account. If you're able to get a decent set of books over to them, or at least a printout of the shareholder account, they can do some planning and even give you a good idea what kind of personal and corporate tax bill you might be looking at. With enough advance, there's a lot of things we may be able to do to manage those tax bills, right? And in keeping ahead of the ball, be aware of the last chance to contribute to your RSP, while still getting credit for the previous tax year. And that deadline is March 1st, or the next business day if it falls on a Sunday. Being ahead of the ball can help you plan appropriately in time to get a plan in place with your investment advisor. Remember, she or he is going to be damn busy too, so don't be one of those tardy Martys. Tip number three. Now, if you're not incorporated and you have an envelope or garbage bag full of receipts, it's time for some homework to get everything organized, categorized, and summarized. You don't want to be paying your accountants to do this, because frankly, anyone can do this. Now, here's a couple of ways to make this fun. Make it a family game. So on a stack of cue cards, write all the expense categories for your businesses: meals, purchases, office supplies, etc., etc. Now, show your kids and your spouse, whoever wants to play, what to look for on the receipt and what pile to put it on. They should be looking at the date of the receipt, ensuring it's for the current tax year. If it belongs to another year, that's another pile for another year's game. Meals goes in one pile, purchases in another, supplies in another. You get the idea. For each receipt pile, the player gets a point. When you're done, you should have a number of piles of reasonably categorized expenses. Now, get the score and announce the winner of the first round. Now, divide up the piles evenly and get a calculator and time each player with a time watch to add up all the expenses before HST, and then another round for adding up the HST. You may want to go through and check this again, especially if there are smaller children involved. Once everything is added, you just need to announce the second round winner. Now, you just need to summarize all those totals onto one page that you can bring to your accountant. And then take your whole family out for dinner to celebrate. First, that you just included your loved ones in a very important part of your business. You've taught your children, a valuable life lesson that I guarantee none of their classmates will have experienced. And you just saved hundreds of dollars, turning a grueling experience into memory that I'm confident they will never forget. No kids? Well, Do the same thing, but grab a bottle of wine, some candles, your significant other, maybe have a Netflix binge watch in the background while you sort through your pile of receipts, and who knows where things will lead. Tip number 4. If you operate your business from your home, gather your expenses, your heat, power, mortgage, interest, rent, insurance, and measure off the office portion. If it's in your dining room, measure that off, and use that against the total square footage of your home. And I also encourage people to measure the square footage of their bathroom. Now, you can only claim business use at home if you regularly meet clients there and don't have another spot to meet them. So now people get really worked up about claiming the business use of their home, the expenses, and they really get bogged down with tracking down the receipts. But claiming your home expenses is generally not going to change your life much. For example, if you've added up all your expenses and they total about 10 grand annually, you measured off your office compared to the total living space of your home and determined that it's about 10% of your home. Well, that would be a $1,000 tax deduction or $250 to $500 benefit depending on what tax bracket you're in. It's still worth paying attention to, but give it your best guess, and if you don't have everything yet, like if you don't have your mortgage interest from the bank, just throw in last year's or slightly less. It's good enough. Tip number 5. This one is for my incorporated business owners. If you use your personal vehicle for business purposes, for God's sake, keep track of those kilometers. The CRA allows your company to reimburse you for business use of your personal vehicle. And we're not talking about small potatoes here. It's 58 cents for the first 5,000 kilometers, 52 cents thereafter. This is not a taxable benefit to you personally. The company gets the tax deduction, and the company can back out the HST portion and get that back. Now, here's the catch. You have to keep a logbook of the kilometers because that will be the first thing the CRA will ask for in an audit situation. But it's worth it. So get in the habit, you will be rewarded. Now, if the company owns the vehicle, that's a whole other kettle of worms. You still need to keep that logbook for a different reason. The personal portion needs to be determined for calculating your personal benefit. You see, because the company owns the vehicle and pays the operating expenses on the vehicle, you will need to personally report any benefit you receive for the personal use of the vehicle. So it's kind of like the opposite of the per kilometer bit mentioned previously. So look, on a side note, okay, if you're considering having your company buy the car, consider this. If you're not going to be driving the car for a whole heck of a lot of business miles, I wouldn't have the company purchase the car. It can only turn into quite a hefty tax benefit and additional taxes, especially if it's a relatively new car. This is a loaded subject that requires some accountant love, which is a good time to plug accountants. Don't ever do anything without first getting your accountant's blessing. It will cost you more in the end, I promise you, by not. I often use the saying, keep your friends close, but your accountant closer. Now, if you're unincorporated, here's how it works. Keep track of all those operating expenses, oil, insurance, gas, repairs. Get out that trusty mileage log. Yep, you need a log here too. And multiply your business miles divided by the total miles driven, multiplied by your total operating expenses. It's very similar to the business use of home calculation I discussed earlier, only it's for your car. Tip number 6. Be mindful of the following deadlines. If you own an operating company, your filing deadline is 6 months after its year end. However, if you owe tax, you will have to pay the taxes owing before 3 months after year end to avoid arrears interest. It's not the end of the world if you aren't right on the mark for taxes owed. Just guess and send in what you think it might be. You may be able to save a little arrears interest, which is not tax deductible. I would highly recommend you make the suggested installments your accountants tell you to send in when your year end is complete. Just doing that will most likely be enough unless something drastic has occurred, good or bad. Again, the sooner you get to this with your accountant, the better. The deadlines are a little different for investment companies and are actually a little worse, like 60 days before arrears interest starts. But again, all good reasons to have an awesome rhythm with your accountant. Taxes is by far one of the most loaded subjects in the history of subjects. I could go on till supper time tonight, break, and talk for the rest of the week. This video is meant for small business owners to see the highest level points, the higher level points. And by far, the moral of this story is keep your books up to date and talk to your accountant early. Hey guys, my name is John Swain, president of Swain CPA. If you like this content, help us spread it to other small business owners in need by subscribing, sharing, liking, commenting, engaging. We, including me, are all in this together. If you are interested in talking more with us individually to see how we can make a difference in your small business, fire me an email at john@swaincpa.ca or check out our website. Not only are we the Navy SEALs of accountants, not only do we maximize and minimize on your tax liabilities, but if you want to adrenalize your profits and pump nitro into your happiness with running this thing, check us out. We can service you no matter where you are in the world. God love modern technology. So thanks for watching, and go out and love your small business.